In today's video, I'm going to be walking through some of the different order types that you can use when trading directly on tradingview.com, and hopefully this helps you out. If it does, make sure to hit that thumbs up button. Let's jump in. So I get the question all the time, how can you execute the different order types that you might be used to in other types of markets? A lot of my viewers come from areas like futures or FX. And so they have questions oftentimes about how to execute trades on ETFs or things like that within the tradingview.com kind of portal, which does, by the way, integrate directly with the recommended broker that I have down below in the description, WeBull. If you do choose to use this, by the way, there's a referral link. You get some sign up free shares when you sign up using the referral link down below, and you'll be supporting my channel if you choose to use that. Anyways, I'm going to be talking about the different types of orders. We have market orders, limit orders, stop limit orders. So what the heck are all these things, and how do you actually use them to do what you want to do within the markets? So I'm going to go through some examples and I'll show you some current trades as well. But first of all, let me just say, let's just go through a really quick example. If you want to buy the S&P 500 SPY ETF at current levels, you could just use a market order. A market order is just going to fill you at the best possible current price that you want to buy. So if you're buying, it's going to give you the ask price that sellers are asking for. And that bid and spread you can actually see is very tight here with what we see right across the screen. So this is our sell ask and the buy ask and the sell bid. So that's kind of where you can see that within tradingview.com. So if I wanted to open a market order and just enter 100 shares, I would essentially just hit buy, and then I would be able to do that. Now, what this will do is it will do a time and force. Keep an eye on this. A lot of times this is a little bit tricky to newer people. If you set an order, a pending order, which is our next type, let's say you go to a limit order. So let's just say that I want to buy at 505 instead. So I set a limit order of 505, right? So that's going to be an ask minus 777 ticks. And let's just say I want to do 100 units. And in this case, what you'll see is that there's this little option where I can do a time and force, where it will basically give you the option to either do just today, right? So if it doesn't hit by the end of the day, this order will be deleted automatically by my broker, or I can do good till cancel, which would make it so that essentially tomorrow, next week, as long as this order is still pending, it is still live to buy those shares if price comes down to my level. So remember that a market order will give you current best possible price right here, right now. A limit buy will give you somewhere below price where you want to set up a buy. A sell limit, by the way, just to turn this around, would be above current price. So a sell limit is going to be above, a buy limit is going to be below, right? So it's basically if price comes up and you do a sell limit, that would get you into a sell or a short position, and a buy limit would get you into a buy at a lower price that you set up based on your own analysis. Next up, we can talk about buy stops and sell stops, which are the exact opposite. So buy stops need to be placed above current price if you are, again, trying to buy. So if I wanted to do like a 517 or whatever, I could set it has to be above current price. So let's just say 520. At that level, I'm adding or buying into a trade. You might ask, well, why do you ever want to do this? Well, sometimes momentum traders and breakout traders will do this sort of thing where they say, if it breaks a level, I want to be in the trade, just fill me at the best possible order upon that buy stop. Now, it should be said that let's say you set a buy stop for 515, but the market gaps higher up to like 516. You will be filled at 516 above your order, because again, a buy stop just says, as soon as this level gets hit, fill me at the best possible price that is available. So you have to understand that the market gaps open or gaps higher, you will still get filled at whatever that current market price available to you is. And we can flip that around with a sell stop. With a sell stop, it needs to be below current price. So currently 512.74, we would have to be, let's call it like 510. So at 510, which is below current price, we may get triggered into a sell stop position in that case, which would trigger us at the best possible price there. So if it gaps lower, again, you would get filled lower wherever that is at the time that your buy stop or sell stop gets hit. Finally, we can talk a little bit about stop limit orders. So this is basically if you want to set a buy stop or a sell stop, but you want to limit the price that you'll pay, right? So let's say we're taking a buy stop and let's say we're doing 515, right? Go back to our example, 515. And that's going to place a buy stop order. So if price goes up, it's going to market orders into that position. But let's say we also want to kind of limit the price that we pay. And so we kind of need to be within the realm of like 5, 15, 50, right? So stop plus 50, et cetera, et cetera. Next up, we'll talk about how you can add a stop loss to your current position. There's a couple ways that we could do this. You can actually set a stop loss when you take a trade. So let's say buy stop on WeBull directly. Let's say I bought this at market and I put a stop loss at 512.20, right? You can also use the calculator here. It's incredibly useful. So if I want to risk 60, if I want to increase my risk, let's say to 100, it might adjust my units that I need to buy, the number of shares, etc. And then I can put a stop loss, etc. So you can do that little calculation if you want to set a stop loss when you enter the trade, but let's say you just enter it and then you want to add a stop loss to the trade later on. I'll show you an example of that right now. I have an IBIT position, and this thing has gone crazy, by the way. Bitcoin's going crazy at the time of recording this video. Let's say I want to add a stop loss to this current position. All I do is, again, I have 92 shares currently. Well, let's say we need to add a position. So let's go ahead and create a new order. So we just hit trade, create a new order, and we need to set the opposite, a sell stop, right? Because I want to sell below current price. And so we can do a sell stop order. And so let's say that I want to sell stop order at, let's just say about break even right now. Well, let's just say 25 to keep it simple for the example here. So we're going to go $25 per share. That's where I want to stop out for my full position of 92 shares. And let's make sure that this is not just until the end of the day. We need to make sure this is good till canceled. So at this point, if I place that, I would then be set up with a stop loss to trigger me out of the position if it in fact comes down and hits that level. Here's another example of a trade that I currently am in where I've actually trailed a stop loss into profit. So in this case, what you can see here is that I do have my 2,500 shares set up, but then I've also got a sell stop order on those 2,500 shares. So all I did was I basically right-clicked where I wanted to set my trade, and then I did trade, create new order, and I did a sell stop for 2,500 shares at this level. So again, that's how you can set a trailed stop in profit. So at this point, if this market comes down, it's going to trigger me at the best possible opportunity to sell upon crossing this level that I've marked in my broker. And of course, just to reiterate, if this was a short position and I wanted to trail a stop into profit, I would need to do a buy stop order instead of a sell stop order, and I would put it, where I want to kind of trail out of my trade. So hopefully this video on the different order types was helpful to you. And remember, if you do want to use the broker that I use, which is WeBull, which is great for US traders, UK traders, Singaporean traders, and maybe a couple other countries that they've opened up in as well, you can use a link down below in the description. If you'd still like to support my channel, there are some other brokers that actually integrate with TradingView down below in the description as well, even for non-US, UK, Philippine, Singaporean traders that can trade with WeBull. So check it out down below in the description. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.